Thank you for joining in. For those of you who are watching us on YouTube replay, please do not hesitate to subscribe, smash that like button, and if you have any questions or comments, feel free to use the comments box below. Today we'll keep on testing the EMA exponential moving average plus the stochastic oscillator strategy. To make sure that everything is working fine. Okay. So let's begin by setting up the chart. First, go to the chart type, select candles, 1 minute, the 1 minute chart. So every candle you see represents 1 minute of price data. Then go to your indicators tab, click on moving average once, stochastic oscillator once. Then go to the pen up here, change the period of the moving average to 200 and change the moving average to EMA. In styles, you can do as you like. I like pink, thick 2 pixels. Then you can go to the stochastic oscillator over here, to the pen also, K period to 5. Styles, I like to make the blue and orange line 2 pixels. Keep everything else the same and click save. Okay. Also, when expiry time, select 3 minutes. The trade amount is completely up to you. I suggest 1 to 3% of your balance. However, since we are using the tournament thing, which is completely risk-free for us, I go for $5 per trade. Okay. Next thing you have to do is to select high payout pairs. So let's do this. I'll try to trade also live market if we see decent setups. All right. So let's begin with the rules of the strategy. Let me find something clear enough to explain the rules. Seems we had a news on the AUD. Okay, let me find a decent chart to explain the rules. This is it. Okay. So this strategy is very straightforward, very easy to follow. It's rules based, so you only have to have all your confirmations in place and then you enter a 3 minute trade. Now, what are the confirmations that you will be looking at? First, you have to see if the price is moving above or below the moving average. If the price is moving above the moving average, you only take buy trades. Okay? If the price is moving below the moving average, like in this case, let me see, I can find. Like in this case, for example, you only take sell trades. So this is the first confirmation. The second confirmation you need is a clear trend. So even though the price might be moving above the moving average, it might be in a consolidation situation, like in this case. I forgot to remove this in auto scroll thing. Let's enable the timer, remove auto scroll. Okay, so in this case, even though the price is moving above the EMA, the moving average, however, it's in a consolidation state. So there's a handshake. Buyers and sellers both agree on buying and selling within this zone. These are completely avoidable areas. Do not trade in this situation. We only take trades if we see a clear trend above or below the 200 moving average. Like in this case, clear, higher highs, higher lows. You see? So in this situation, you take trades. So now we have two confirmations in place. We have the price above the 200 moving average, and we have a clear trend to the upside. Okay? Your third confirmation is you need to see the stochastic oscillator. Let me zoom in a little bit here. You need to see that the stochastic oscillator has reached the oversold level. Okay? Like in this case as well. See that? Beautiful. Whenever you see the stochastic oscillator, most preferably both lines, if you see both lines in the oversold position below the 20 level, this is the optimum. If you see the blue line, like in this case, crossing below, this is also good to go. Your So now we have three confirmations. The fourth is we need to see a clean and clear crossover, the blue line above the orange line, and both lines have to be pushing to the upside. So in this case, this cross happened at the close of this candle over here. You take your buy position for 3 minutes at the close of this candle, and here you go. You have yourself a winning trade. Okay, a pro tip. Let me give you a pro tip. Now look at this over here. You have all the confirmations. However, the stochastic did not reach the oversold level. And even though the blue line crossed above the orange line, which happened on this candle, if you took a buy position here, you would have been in a loss. In a win, yes, but however, it is shaky. Okay, it's a shaky win. You could have easily lost this one. So only look for the highest probability trades. Look for oversold and overbought conditions and trade accordingly. For those of you who are watching, I will now move to actually taking trades. What we did right now is called backtesting. If you have any questions, this is the time. Use the live chat. Okay, so let's proceed. Actually, we have a setup here forming. I'll take a buy on this one. Personally, I do not trade using indicators. I prefer clean row charts. This is nice. We'll have a clean crossover. I'll take a trade here. My God, this gap up. Okay, so this is the first trade. Right, so why I took this trade, all the rules, all the confirmations we need are in place. We have a strong buyer's momentum, clear trend to the upside. The stochastic, the price is above the EMA. The stochastic reached the oversold level. We saw both the lines crossing the blue line crossing the orange line to the upside. So we took the buy position over here. 3 minutes. Quite easy. No rocket science at all. I got lots of requests from my audience to test the strategy, so I'm doing it live in front of everyone. This is the fifth day testing the strategy. Sixth day actually. The first four were amazing. We made money. Yesterday we lost, and this is the sixth day, which is great actually. The only reason I don't like this is because of this gap. This gap over here to the upside will create a little bit of a seller's pressure. Gaps have to be filled in the market. However, we still have a good position. Beautifully. This trade is going perfect till now. Nice. If you have any questions, you can use the live chat. Please, if you are watching us for the first time, subscribe and smash that like button. And if you have any questions whatsoever regarding binary options, use the live chat box. We are here to build a profitable team of binary option traders. And that's our first win of the day. Beautiful trade. Exceptional. This is a typical setup. This is what you should be looking for. So let's find something else. Same situation, beautiful trade. However, we have a supply area over here, so might be a little bit risky. We have all the rules in place. So before I take the trade, I'll explain. The price is above the 200 moving average. It's making a clear higher highs and lower lows. The stochastic is going towards the oversold level, the oversold 20 level over here. So we just have to wait for two more confirmations for at least the blue line to touch the 20 line and the clean cross of both lines to the upside to take the buy trade. If those don't happen over here, I won't take the buy trade, especially that we have a strong supply area over here. Okay, so you need to also learn how to read the charts. This is why I don't like to rely solely on indicators. And this isn't the way I trade in the VIP signals room. I use a completely different strategy based on a 15 minutes chart, and we take 15 minutes trades or less, a little bit less, but nothing less than 5 minutes. So let's see the situation here. This isn't a healthy stochastic behavior. When you see those lines very tight together, avoid trading. And also, we didn't see any of the lines touching the oversold level at the 20 level. So till now, we don't have any positions to take here. It might reject from this zone. See that? You have a strong supply area. Let me mark it for you. This is it. Like this zone. They kicked in and pushed the price all the way down. So something similar might happen over here. Push to a reversal to the downside. So in this case, I avoid taking a buy trade here, especially that stochastic wasn't oversold. Okay, so you always have to combine price action, supply demand zones, along with your indicators. Indicators are only an additional level to help you. However, you, you shouldn't base all your trading strategy on indicators. So let me look for something else. Okay, you have a strong rejection zone here. I'll take sell here. So why I took this trade, even though I wanted it a little bit higher, it should have been here. I'll take one here as well, no problem. So why I took this trade, first, confirmation. You have the price moving below the 200 EMA. Second, confirmation. The stochastic oscillator reached the oversold level over here, overbought, and we have a clean cross of both lines to the downside. In addition, you see a very strong rejection zone here. The EMA itself, it serves as a resistance line in this case. All this zone is a rejection zone to the downside. So I took a risk on this one. Let's find something else. We might be having a reversal here, so I won't take it. This is nice. You have a powerful push to the downside, a clean break of the EMA, and a clear breakout from this area here. So this support level became a resistance level. However, we still need the stochastic to push and give us an overbought level. Let me see those two. We might win these two. Beautifully pushing to the downside. Let me check what's happening. The EMA thing is very glitchy on pocket option. SMA is stable, more stable. Okay, come on. No problem. We'll look for another setup somewhere else. Okay, this is very nice for a buy. Huge buyer's momentum. Stochastic is pushing to the downside. We have bottoming tail bar signifying buyers are here. So we still need the stochastics to reach the oversold level, and across to the upside we take a buy. Okay, let's wait for it. Okay, the blue line touched the oversold level. If you can see the orange line crossing below the 20 level over here, it's going to be an additional level of confluence. We still are seeing bottom wicks. Buyers are stepping in here and here, rejecting, and it's happening here as well. So if I see a cross to the upside from the stochastic oscillator, I'll take a 3 minutes position to the upside. I'll take 3 trades on this one. I'll risk it. Three positions. Depending on the close. If not, I'll wait. I'll wait for it. I won't take it now. Strong sellers here. Perfect. So we are moving. If you can see, this is the ideal situation. We still need for the blue line to cross above the orange and the clear, with a clear push to the upside to take the buy trade. In addition, for those of you who are Fibonacci freaks, you see this strong push. This is the middle line, so we have a 50% Fibonacci level also as well as an added level of confirmation. This is nice. I need a clear cross from the stochastics. Not yet. See, I don't have a cross yet. I wait for this candle. Do not hesitate to ask any questions you might have in the live chat. My name is Mark, so just so you know. Still, I think if it closes red, we won't see a cross of the stochastic lines, so we'll patiently wait for it to give us a clear entry point. Still, not yet. See, stochastic is still, both lines are very tight. Avoid trading in this situation. We have a strong demand zone here. So let's see. Okay, I guess we will get our cross. If this candle closes green, somewhere around this area, we'll get the cross of the stochastic. That's it. Okay. I'll take 3 positions on this one. Three seconds. Okay. So you see we have the cross of the stochastics here. Clear cross to the upside. Both lines are pushing up. And we are in an uptrend. Buyer's momentum. The price is above the EMA. And we also added a Fibonacci line over here. This is the 30 level, which is even more powerful. So this thing is gonna do a higher high. Most probably, of course, you can never be sure 100%. Anyone who tells you, whenever you see something like sure shot trade, guaranteed trade, especially before taking the trade, that's complete rubbish, okay? Now, when you are watching the trade unfolding, you can see some clues to tell you if it's going to be a profitable trade or not. In this case, we have all the clues, very strong. Two lines of the stochastic are pushing strongly up. This is a strong bullish close. And here we have weak sellers. The buyers are putting lots of pressure here. So if we get a green close here, at this case, I can say that the trade is most probably guaranteed. Hope this makes sense. We have a gap down. This is beautiful. I like it. This candle will reject at some point and push to the upside. 50 seconds left. Nice, beautiful. Nice. This is done. Nice trades. And here we go. Three trades in the money. We are now in profit, 7%, $7. We started with $100. Now we have 6.9, which is 7% ROI. So let's continue. So we have 4 out of 6 trades in the bags. Beautiful. Let's find another setup. Let me see the live market pairs. Let me take something on the live market. This is nice for a buy. I'll wait for this one. Okay, so why am I saying that we have an opportunity here? First, we have a strong buyer's momentum to the upside. Second, the price is above the 200 EMA. So I'm looking for a buy setup. Third, we have the stochastic oscillator going towards the oversold level. Okay, so I will be waiting for a clear cross here and both lines crossing back to the upside. I'll take a buy. So let's wait. If for any reason the stochastic oscillator crossed at this level, I won't take any buy trades. Okay, so let's see. It's rejecting from the zone. Let me check the 15 minutes. See that we have supply zone on the 15 minutes chart. We have a strong supply zone over here, which could make, which may already made this strong, powerful move to the downside. So, so I would think twice before taking a buy trade on the 1 minute chart. However, since the rules of this strategy does not require checking the 15 minutes chart, I'll take it if I see the stochastics giving me the signal. Not yet. However, this is a beautiful situation happening. Whenever I see a cross to the upside, I'll take a $3 position. I'll reduce the amount because the 15 minutes chart is against us. However, since we are testing this specific strategy, so we'll stick to taking the trade. However, since I see some seller's pressure on the 15 minutes chart, I will reduce the amount to play it on the safe side. So let's see if we're gonna get a crossover stochastic. I'll take a 3 minutes buy on the AUD Japanese yen live market. Preferably, I need to see a strong green candle. However, if I have my signal from the stochastics, I'll go for it. Not yet. We're gonna see here the two lines. We're gonna see it tight at the close of this one. See that? Both lines are tight, so we avoid taking the trade here. Let's wait and see. Okay, we have a cross over here happening. We have strong, relatively strong green candle. I'll take the buy if we get a clean crossover to the upside from the stochastics. Okay, I'll take it. After this trade, we'll take a 10 minutes break. I will come back and show you how you can use this strategy for forex trading. If we get ourselves a strong green close here, this trade is gonna be safer. Also, I'll do something else. I'll double up on it whenever I see the second cross of the stochastic to the upside. However, let's keep on checking the situation. Stochastic oscillator lines are very tight. I don't like when this happens. One minute and a half left. Okay. We need a strong green close. That's bad. still have this minute. Yes, come on. 20 seconds left. So you see, whenever you trade against the overall trend, you will have, shaky situations. However, I'll take two here. We have a clean cross above the 20 line. So see, when you are on the 1 minute chart, this is why I don't like trading smaller time frames. When you are on the 1 minute chart, even though you see a trend, powerful trend to the upside, this shouldn't be necessarily the case on a higher time frame. So if you go to the 15 minutes, you see that actually the pair is on a downtrend overall, plus you have a strong supply area over here. So you should always combine different levels of confluence and confirmations levels before taking the trade. However, I retook two more trades here because since we are in a short-term uptrend, so and the retracement is over since the stochastic clearly crossed to the upside, I took a risk on two more trades. So always use higher time frames to give you a more holistic view, a general view of where is this trend going. This is why I like to trade. For my own trading, I use supply and demand areas, liquidity sweeps, because on higher time frames, because usually market makers, the big banks, the hedge funds, the investment banks, these guys operate at these levels. It's all about the price. It's not about the indicator. Everything you see on the chart is about the price that you see over here. Okay? The banks and the market makers do not use the Fibonacci. They do not use the stochastic oscillator. They do not use, um, you know, they might use moving average, yes, but stochastic and RSI and all those indicators, the people who are moving the market, whether it is the broker, whether it is the banks, the central banks, governments, you name it, whoever is moving the market is looking for a price that he prefers. Usually that's the trade. So these people are looking for zones. Let me show you something on the 1 hour chart. Let me also remove the stochastic since we finished testing the strategy. So I remove the indicator. See, this over here is a very powerful zone. Why? Because we know for a fact market makers, they like the prices over here, this area. They like the price over here. Whoever is holding AUD Japanese is okay and likes to sell using this level, right? So I'll give you a scenario of how this works. Let's say I am JP Morgan, all right? I'm JP Morgan, and a client of mine, let's say Pepsi, all right? They want to pay, they need AUD Japanese. For some reason, they need the Australian dollar Japanese yen. Or let's say in another way, they have lots of AUD Japanese yen. They want to exchange those billions of dollars. Imagine Pepsi, global. It's a huge conglomerate of a company. At the same time, you have Nestle or Cadbury. Okay, they also want this currency pair. They want to sell it. So they call JP Morgan and say, "Hey, JP Morgan, last time, like at 8 p.m. yesterday, I bought, you gave us, you sold for us this currency pair at this price. So we need you to sell X amount of money, billions of dollars in this case. Whenever the price, I want the price to come over here and sell the AUD Japanese worth of $20 billion. Okay, that kind of an amount moves the market. It isn't you and me and all the other retail traders like, you know, trading with one lot and one mini lot and 100 lots that move the market. It isn't us. So JP Morgan, whenever the price comes back over here, JP Morgan will step in and start building up their positions to the downside. Since two major clients like Nestle, shitty handwriting, and Pepsi Global want to dump this pair over here at this price. They like the price. That's it. It's all about the price that you see here. Nothing else. All right. So that's why indicators are not that much of a reliable source for you in this case. Okay, let's take a break and I'll come back uh, to do some high frequency trades. I know you like to watch these, so let's take a 10 minutes break and come back.